Greetings. Thanks for joining me for this video titled Revealing Valuable Advice for Prospective Stock Investors. I produced this video in July of 2010. At that time, most persons that were considering entering the stock market saw weakness in the market, and they had to be highly skeptical about investing in the market at that time. There was nothing unique about July 2010. The stock market naturally has its ups and its downs, creating opportunity for knowledgeable investors to make money regardless of which direction the market is moving. My goal with this video is not to recruit new stock market investors, but rather to provide a fair and balanced perspective of the market, its risks, and its opportunities. My goal is not to tell you what to do, but to give you some insights that may assist you in your decision to enter the market and how to enter the market if you in fact choose to do so. When I talk to anyone that is considering getting into the stock market, I often ask them about their reasons for getting into the market. In today's economy, the answer is somewhat predictable. Most individuals invest in the stock market because they simply want to make money. In today's economy, with a number of people that are personally in very stressful financial situations, it's easy to believe that many individuals are considering investing because they need to supplement their existing income to cover needs beyond their current financial means. Many individuals feel like they've been backed into a corner with few opportunities for escape. They're fearful because they can't make ends meet financially. They may be unemployed. They may have already lost their home due to foreclosure. They can't find a job. The bills keep coming. They need more money and they're stressed out. If you are a prospective investor, and I've just described your situation, you have a good future ahead of you, but for now you are experiencing a nightmare. Making any decision under these circumstances has got to be very difficult, as the risk you're facing is great. As prospective investors look at the small amount of extra cash they have and consider investing it in the stock market, once again they experience fear. They have heard so many stories of people that have made money in the market, yet they know people that have lost money in the market. Furthermore, they know about the stock market decline from late 2007 to early 2009. They know that the stock market in July of 2010 was hanging on the edge of a cliff and the future was very uncertain. All of these signs point to the stock market as a terrible place to be considering for investment of already scarce financial assets. Nelson Mandela has been quoted as saying, "I learned that courage was not the absence of fear, but the triumph over it. The brave man is not he who does not feel afraid, but he who conquers that fear." I say that July 2010 may not have been the best time to invest, but was a great time to prepare for investing. For example, after a long downward plunge ending in early March 2009, the stock market rose by 80%. More than 1,000 stocks doubled in price in the following 12 months. Those people that lived in fear and sat on the sidelines missed out on this very big move from mid-March 2009 through mid-April 2010. As you consider becoming a stock market investor, answer the following questions. Question 1. Why did you want to invest in the stock market at this time? Consider this. There is good money to be made in the stock market, but it will take work, focus, and diligence on your part to get positive results. Question number 2. Have you sought the advice of a financial advisor? I'm not a financial advisor, but I've seen people in similar situations that have found a financial advisor to be very helpful. Question number 3. Are you willing to get some formal training? I've used the analogy of the person that steps into a helicopter and attempts to fly it without any training. The results are likely to be disastrous. You can start out using a broker to guide you in your investment choices, but you'll always get better results if you're trained such that you can participate intelligently in the decision-making process. Question number 4. How much money can you afford to lose if you invest in the market? Even with training, you'll lose some money in some investments. Psychologically and financially, can you deal with that? Question number 5. How much money are you willing to invest in the stock market? There is no right or wrong answer here, but the kind of money you invest will impact the kind of investments you should make. Question number 6. Do you expect to frequently buy and sell stocks? If so, consider the amount of money you'll pay in broker commissions. For example, if you have $500 to invest and you expect to buy or sell stocks 10 times a year, then you'll likely pay approximately $80 per year in commissions. That amounts to 16% of your total portfolio. That's just way too high. Question number 7. Do you have less than $5,000 to invest? If so, buying individual stocks may not be right for you unless you expect to hold these stocks for a long term. By long term, I mean a minimum of 6 months. In this case, you might be better off investing in a mutual fund, an index fund, an ETF, or a DRIP. Working through the above questions will help you to make some wise choices which should minimize your fears. Nobody is exempt from fear. Make some wise choices and prepare yourself so that you know what you're doing and why you're doing it. That will go a long way to minimizing your fear regardless of your situation. A famous investor by the name of Jesse Livermore once said, "The game of speculation is the most fascinating game in the world, but it is not a game for the stupid, the mentally lazy, the person of inferior emotional balance, or the get-rich-quick adventurer. They will die poor." Whatever your decision, I wish you a prosperous future. Have a great day.